Silver didn't just beat the stock market in 2025, it broke it. Stocks had a solid year, gold surged, but silver? It absolutely exploded, and almost nobody understands why. Now, here in 2026, one single move by China may have just changed the silver market forever. The question is simple. Is silver about to boom again, or is it going to crash back down to reality? Let's rewind for a second to understand how we got here. In 2025, the stock market gave us a respectable 16% gain. Gold had an incredible run, surging around 60%, but silver shocked everyone, rallying a staggering 145%. It didn't just outperform stocks, it crushed gold and even Bitcoin. This wasn't just hype or a random spike, it was a perfect storm. Three powerful forces collided in 2025: overwhelming demand, tightening supply, and a major shift in government policy. Industrial demand surged at the exact same time that global supply tightened. And then government stepped in and completely changed the rules of the game. To really get it, you have to understand that silver is no longer just a precious metal you put in a safe. It's a critical industrial input, and this demand isn't optional. Think about the biggest technological shifts happening right now. Artificial intelligence data centers require massive amounts of silver for their components and conductivity. Electric vehicles use about 70% more silver than a standard gasoline car. Solar panels, 5G infrastructure, consumer electronics, and even critical defense systems all rely on silver. This demand isn't slowing down, it's accelerating at a pace we've never seen before. For years, the market treated silver like gold's less exciting little brother. But the reality is, its industrial role has become its primary driver. While gold sits in a vault, silver gets used up, consumed in the products that are building our future. And that brings us to the real turning point, the elephant in the room: China. China controls roughly 70% of the world's silver refining capacity. This is a crucial detail many people miss. Even if silver is mined in Mexico or Peru, it often gets shipped to China to be refined into the 99.9% pure form that industry needs. This means China doesn't just control the raw ore. It controls the most important choke point in the entire global supply chain. They hold the keys to the kingdom. And on January 1st, 2026, they decided to turn the lock. On that day, China officially announced restrictions on silver exports, specifically targeting the United States. Silver is now being treated like a strategic national resource, putting it in the same category as rare earth minerals and other critical materials that China has used as leverage in the past. So how do these restrictions actually work? It's not an outright ban, but it might as well be. Beijing approved only about 44 companies to export refined silver, and these permissions are set to apply through 2026 and 2027. The government now has direct control over how much silver leaves the country and where it goes. This effectively puts a hard cap on the global supply of refined silver available outside of China. The immediate effects on the market were predictable and swift. Less silver flowing out of the world's largest refiner means a much tighter global supply for everyone else. Prices started reacting almost immediately. We're already seeing sharp spikes and new record highs being tested. This isn't just speculation or market panic. It's a textbook case of supply and demand. When supply gets squeezed and demand remains high, prices have only one way to go. Now, why does this matter so much for you and for the United States? The U.S. is heavily reliant on imported refined silver. Our most important industries, manufacturing, technology, and green energy, all depend on a steady flow of it. If silver becomes scarce or prohibitively expensive, the costs to produce everything from your phone to the solar panels on your neighbor's roof will rise. Higher production costs don't just stay at the corporate level, they inevitably get passed down to consumers. That means inflation. We could see the price of electronics, cars, and even our electricity bills start to climb, all because of a single policy decision made halfway around the world. But this story is about so much more than just silver. This is a clear example of economic warfare being waged through commodities. China is strategically using its control over critical resources as a powerful form of leverage. The era of trade wars being fought only with tariffs is over. The new battlefield is the supply chain itself. Control the resources and you control the economies that depend on them. Silver has just been moved from the sidelines to the absolute center of this global conflict. This isn't a financial headline you can afford to ignore. This is a fundamental shift in the global economic landscape. The move by China isn't just a ripple, it's a shockwave. And it's heading directly for the U.S. economy and ultimately for your wallet. The game has changed. In 2025, the U.S. dollar had its worst performance in nearly a decade. When people lose faith in paper money, they don't just sit on their hands. They sprint towards hard assets, things you can physically touch. That's why gold surged. It's the classic fear trade. But silver is where things get really interesting. See, silver is different. It's not just money, it's an industrial necessity. Think about it this way. Gold's price rises mostly when fear rises. It's a safe haven. But silver? It's a hybrid. Its price rises with fear, just like gold, but it also rises when the economy needs it. And right now, our modern economy is absolutely starving for silver. Every major technological revolution we're counting on depends on it. Artificial intelligence servers, electric vehicles, solar panels, our national defense systems, and the massive data centers that power our digital world. They all require silver. This makes silver a unique asset. It's part hedge against economic chaos and part fuel for economic growth. Now, what happens when the price of a critical component like silver spikes and stays high? It creates a hidden inflation that ripples across the entire economy. Companies that need silver for their products face two tough choices. They can either absorb the higher cost, which eats into their profits and makes them less attractive to investors, or they can pass that cost on to you and me in the form of higher prices for everything from cars to electronics. Either way, high silver prices act like a tax on innovation and growth. The US government saw this coming. In late 2025, a quiet but monumental policy shift occurred. Silver was officially added to the US list of critical minerals. This wasn't just some bureaucratic paperwork. It elevated silver to a matter of national security. Suddenly, having a stable supply of silver wasn't just about the economy. It was about ensuring the US could build the next generation of technology and defense without relying on other countries. Adding it to this list gives the government legal power to fast-track domestic mining and production, cutting through red tape to secure our own supply. This move makes perfect sense when you look at the bigger picture of the U.S. versus China. The U.S. economy is still the world's largest, at over $30 trillion. China's is smaller, but it's growing at a much faster pace. The strategic goal for the U.S. is to reduce its economic dependence on China, especially for critical materials. By declaring silver a critical mineral, the U.S. turned this shiny metal into a new pressure point in that global competition. It's about reshoring supply chains and making sure America's future isn't built on materials controlled by a strategic rival. This all connects to a broader trend we're seeing called de-dollarization and commodity stockpiling. When nations start losing trust in global trade and the stability of currencies like the dollar, they do what people have done for centuries. They hoard physical resources. In times of uncertainty, physical commodities, oil, grain, and metals like silver, become more valuable than promises on a piece of paper. This long-term trend of nations stockpiling real stuff provides a powerful underlying support for demand, suggesting that the need for metals like silver isn't going away anytime soon. So, with all this happening, what does it actually mean for you as an investor? There is no single right answer or perfect portfolio. Your strategy depends entirely on what you believe is going to happen next. Let's walk through a few potential scenarios and the investment options for each. First, let's consider option 1. You believe silver's rise is just getting started. If you think geopolitical tensions and industrial demand will keep pushing prices higher, you might want direct exposure to silver. This could mean investing in a silver ETF like SLV or SIVR, which track the price of the metal itself. Or you could look at silver miner ETFs like SIL or SLVP, which give you exposure to the companies pulling it out of the ground. And for those who prefer tangible assets, buying physical silver coins or bars offers direct ownership. Now for option 2, you think silver has run up too fast and is due for a pullback. A price drop isn't necessarily a bad thing. In fact, volatility creates opportunities. Instead of chasing the market at its peak, you could watch for corrections. A dip in price could be the perfect entry point for a long-term position, allowing you to buy in at a more attractive level. The key here is patience, waiting for the market to come to you instead of panicking and buying at the top. Option 3 shifts the focus from silver itself to the broader trend of American revitalization. The government is using tariffs and incentives to bring manufacturing back to the U.S. If you believe in this Made in America resurgence, you could look at industrial ETFs like XLI, which includes major manufacturing and industrial companies. Another angle is infrastructure ETFs like PAVE. These funds invest in companies that will benefit directly from rebuilding domestic supply chains, roads, and factories, all of which supports the new U.S. industrial policy. Finally, there's option 4, the international angle. You don't have to bet solely on the U.S. if you think China will continue to be a dominant economic force. You can gain exposure through China-focused ETFs like FXI or MCHI. It's also worth remembering that the US and China aren't the only players. Other major silver producers include Mexico and Peru. The US is actively investing in building alternative supply chains with allied nations, creating opportunities in those markets as well. Diversifying internationally can be a smart way to play this global trend. So here's the big takeaway from all of this. Silver isn't just a shiny metal anymore. It has transformed into a critical geopolitical asset, sitting at the intersection of finance, technology, and national security. It represents an industrial bottleneck that could determine the pace of our future progress. And because of all this, it's an under-the-radar investment theme that most people are completely overlooking. What happened in 2025 was the warning shot. It showed us how fragile things are. But 2026 is where the consequences of these massive shifts will really start to show up in the market. If you want to understand exactly how to navigate this new landscape and find the opportunities that others are missing, stay tuned to the Silver Thesis channel. And don't forget to like and subscribe. Thanks for watching. I hope this gave you a new perspective on what's really moving the markets. Always remember to do your own research, and I'll see you in the next video.